Yeah, that is a little bit contrary, isn't it? Yeah. He might have been maybe laissez-faire with letting the market system do its thing, but when it came to the boardroom, it seemed like he had an agenda, and he was going to get his way, right? So that's why the chairperson is considered the second most powerful person in Washington. What does it mean to have power? If we think about a powerful person, what does it?
Influence others.
Okay, your ability to influence others, or to either influence their behavior or to influence outcomes somehow, right? So you wield a great deal of power. So Obama can roll over in his bed and press the red button, and we've started, World War III. So he's got quite a bit of power potentially in his position. And likewise, the Fed chair can come into the meeting and maybe even appear to be democratic, gathering all the information, but at the end of the day, they might have had their own agenda to kind of push and steer. So there's some important work in economics on agenda setting and the power of the person who runs the meeting, on how they can kind of steer things their direction through the setting of the agenda and who's allowed to talk and who's not. And so there is quite a bit of power with that chair position in terms of being able to set the agenda. And we see that here in this article on how each chair could wield their power a little differently. So, how did you like that quote by Greenspan? Greenspan's famous for being obscure. I remember this was a big deal when he said this. I can't remember what year. They don't say it here, but at the congressional hearing, talking to all the congressmen, remember, I guess I should warn you, if I turn out to be particularly clear, you've probably misunderstood what I've said. That is pretty awesome. All right. So, I want to get back to our, any other last comments on that? So where we left off last time was talking about this guy. I remembered to bring my picture. So Paul Volcker was the chair of the Federal Reserve, the big tall lurch guy there, back in 1979, I think it was, 78, 79, up till into the 80s when Greenspan took over in 85 or, well, no, it would have been, must have been 86, I think. So, and then Alan Greenspan took over Paul Volcker's position. And so last time we talked about how influential and controversial Paul Volcker was in some respects to come in and really hammer the American economy in terms of monetary policy. So during the 1970s, we had this high inflationary time, unprecedented in the United States, where inflation rates grew to 10, 12%. And Volcker said, we're going to stop that. And so through a contractionary monetary policy, reducing the money supply, just put a halt to that inflation and deflated things rather quickly. In doing so, he created a recession, which we hadn't seen for a while too in the 1982-83 time frame. So the economy dipped down. In other words, it hurts when we do that contraction. But inflation had gotten out of control, and so that was one way to do it. But he didn't do it through a little bit here, little bit there type of philosophy. Instead, it was just boom, put the hammer down, let the economy crash, and let the inflation come back. So our first section that we did last time, of my students, does everybody got the interview? I've got 3 additional copies. Oh, you got that one? That's fine. Yep, that's the same thing. So does everybody have a copy? I have 2 extra copies. And David might have an extra one too. Okay. So everybody got one? So, including our visitors today, we're going to do what we did last time. And all we did was a round robin. So I'll just take the students. We'll cut the moms some slack here. But the students who are visiting, I'll tell you where it's going to be. And all we did is we alternated talking. So this is an interview with Wayne Angel, who was a Federal Reserve Board governor. So he sat on the 7-member board where Paul Volcker was the boss. And after he left the Federal Reserve, he gave this interview. And so this is part of the archives of, I can't remember where I pulled this from, publications of the Federal Reserve Bank of Minneapolis. So he was interviewed with that. And what we worked through last time was how he stepped to the plate and made kind of an aggressive move. So why was he appointed? Why did Bob Dole, Senator Bob Dole at the time of Kansas, why did he nominate Wayne Angell to the Federal Reserve Board? What did he think he would do well?
For the farmers.
Okay, for the farmers. So Wayne Angell has a farming background. He even owned a farm and expanded that at one point in his life. Obviously, he's in Kansas. He's a professor at Ottawa University for 20, 25 years, so he's been here and thought that he would represent the agricultural interests. And this inflationary time went through the 1970s. Paul Volcker pulled the reins in and successfully deflated the economy. Even though it was controversial, it was pretty much garnered in favor. The American public thought that that was the right thing to do and that we'd all suffer through a recession together and bring that in. And so now little Wayne Angell, I say little because he's about 5'0" on a good day if he's got a little bit of heels in his dress shoes. So he's about this tall. Well, you can see there's me. I'm about 5'9" on a good day myself, and Wayne's down here. So little Wayne Angell from Liberal, Kansas comes into this boardroom and says, I think we should increase the money supply. I think this is hurting agricultural interests, and I think we should do something a little different. In his first month on this very powerful position, very powerful board, that's a big deal, he came in and kind of rocked the boat. And so that was a controversial thing. It's kind of what we set the stage for. So we're going to, yes, Michael?
Who's the gentleman in the middle?
This is Art Laffer. So the Laffer curve, if you guys remember from macroeconomics. That's Terry Haynes here at the university. So, did you know that, or are you just being?
I told her it was Jim, his twin brother that has
All right. So on your sheets, let's see. We left off with the long one. You guys might have to help me out. Good. All right, so now, why is this thing? Oh wait, yeah, it's my own there. I had some of marked too. All right. So here's where we're at on page 3. It's kind of confusing the way I tried to save paper and be a good steward of resources here. So page 3, right at the bottom, you guys. So this is on the very first page. If you flip it once, and you'll find this region here. So this is where we're starting. So here's how it works. I'm the interviewer, and so everywhere it says region, I'm going to read that, and then we're just going to round robin through the classroom. And so we'll start over here with, why don't we start with Colby, and then we'll go to Chris, and then you guys just kind of snake through, and then we'll go to Nakoa here, and then we'll come up. So this will be your first. You'll have plenty of time. You'll see how the flow is, so don't be nervous. And then Dylan, and then here, and then up to Corbin, and then we'll kind of snake back, and then we'll start back with Colby again. Okay? So, all right. So, in the Senate hearings, you described yourself as a hard money populist. In terms of your political philosophy, how much importance would you give to populist leanings?
Populism is a big chapter in Kansas history, just as it is in Minnesota history. I'm a believer in democracy, a believer that people's well-being is what it is all about. No economic system should serve in any other master than the people. That means all the people. Populism has the notion that everyone counts. Farmers, in a sense, in the 19th century were being severely harmed by the stop again, go again transition back to the old pre-Civil War world rulers.
And Chris? Oh. Yeah, we're just doing paragraphs.
The deflation would not have been so bad if it had been predictable, but it had not been predictable because we had silver people get in there, and it was unanticipated deflation. In that period, They did such harm and gave rise to the populist movement. To me, a hard money populist is exactly the right kind of populist to be. As I said to the people from inner cities at the Howard University program, it is the person that does not have much wealth that is the most defenseless in regard to bad economic policy. The wealthy and the knowing can always, in a market system economy, escape the ravages of bad policy, but the people cannot. So yes, I'm a hard money populist.
Most agree that small town bankers see you as a consistent ally. Do you see yourself that way?
A member of the Board of Governors has a very broad responsibility to the people, and any relationship with any one group really should only be thought of as a temporary means to the appropriate end. Washington is a political town. To accomplish what you wish to accomplish, you need a support group. So, there are alliances in the political arena. Those alliances, it seems to me, if one keeps an eye on the ultimate goals, are temporary.
Given that at times, at least there is a strong relationship between you and the community bankers, does that feed into your general opposition to the liberalization of interstate banking?
Well, that's one of the few impressions about me that is incorrect. I have never opposed the movement toward interstate banking as a member of the Board of Governors. I haven't been a strong proponent partly due to the temporary alliances, but I have never advocated that interstate banking would lessen competition.
Anyone who understands competition knows that interstate banking poses more opportunities for improved competition than it does for straight-on competition. So that just isn't a positive that I'm noticing. I can't claim to be a populist who has been concerned about the pricing of loans and the spread between loans and the prices banks make on CDs without being in favor of competition in banking.
Here in the 9th District, you have tended to vote against bank consolidation efforts. Of course, each request is considered individually, but have you an overriding concern about the concentration in the banking system?
I have an overriding concern about public policy that would appear to be indifferent in regard to concentration and about a public policy that would promote along.
My view is that the government is not of the business, and it is not out of the business for two reasons. First of all, in 1866, we imposed a 10% surtax for the issuance of the state bank and private bank notes. We effectively outlawed private banking. Outlawing private banking, we say there are rules to entry, and those rules to entry are that you get a franchise. We have let our concerns about safety and soundness misguide us to impose heavy capital requirements for these parties. So when the government imposes these barriers to entry, like high capital requirements, like $1 million in capital to get a credit in a agricultural community as a result, the new bank will not be viable, and its managers will also be tempted to engage in sound banking. The only way such banks can meet and servicing of such a huge capital is to grow too rapidly, which is the most dangerous way for these parties to behave. If we lowered the growth capital requirements for new parties, I could set the additional limits.
I did vote against some merger opportunities. I would strongly prefer the option of lowering the barriers to entry, but I'm not for them.
If the Fed is seen as being indifferent to competition, we then lose our morale or moral authority to do what needs to be done. There are many reforms in banking we need to be a part of, but we cannot carry that out, it seems to me, while blinding ourselves or shielding ourselves from evidence that exists.
Now here and again, the staff of the Board of Governors has worked very hard, as well as the staff of the Federal Reserve Bank of Minneapolis, on these issues. And very capable scholars differ on some of these questions, but it is one of the most refreshing parts of the Fed to see that there are some disagreements which have come to the table. The Minneapolis Federal Reserve Bank has been willing to bring their analysis and stand toe-to-toe with the Board of Governors. In some sense, my vote in the 9th District manager cases have also been votes of encouragement to the Reserve Banking staff to do their own thing.
Okay, let me pause there for a sec so we can digest a little bit of this. Questions or comments on what's been said? Some of that got a little thick.
Well, you're kind of criticizing him to begin with, or at least trying to, because he used the fashion of populism.
Mm-hmm.
And it almost seems like they're kind of scared that
Mm-hmm.
Okay, so what are you saying?
Yeah. So what's meant by populism? Just to make sure we're all on the same page there. Or Michael, what's your interpretation?
Well, seeing as I play the populist president,
Yeah, just a general
yeah,
definition.
it's really down to the level where every person's voice matters, and rather than having a democratic system that can, for example, electoral college doesn't necessarily have to do with the people.
Okay. So just being for the people, right, at a very grassroots, individual level, a populist type thought, I guess, is just that you're thinking that way always. And so him being a hard money populist was that his decisions on monetary policy were always kind of thinking about the little guy always, and how that, not necessarily the banking system or other players in the market, but first and foremost always kind of the little guy. Now, what about this barrier to entry business that we just read? I think that's kind of gives some interesting insights to. So they were really talking about competition. So is he for that or against it or what?
Well,
Oh, yeah, go ahead, Rachel. I said.
okay. I was going to say that they noticed that he voted against a lot of mergers and consolidations, which would lead you to believe that he was against it. But he is saying that no, he's not against mergers necessarily, but he's against how difficult it is to become a private bank.
Yeah.
Barriers to entry, those high capital requirements.
Right. Reno, do you have something to add?
I was just going to say, even barrier to entry, limits the competition because the small town banks can't get started.
Yeah. Yeah, so a theme that we're going to explore even a little bit later is how we can use government regulation to create a barrier to entry if there's a high cost of entry. So kind of the oil industry is a culprit of this right now. The existing oil people who are doing fracking and other things, and we can have, I'm setting aside the whole environmental issue of discussions about that, but they've been pretty pro-environment and actually are saying, yeah, we should be regulated. Yeah, we should be regulated. And I talked to an insider guy who owns a company, and he kind of just told me, well, yeah, it's in our best interest to erect those barriers because that makes it harder for any yokel to start popping a straw in the ground in their farmland and start cranking oil out, right? So it makes it difficult for entry by having higher regulations, a fee, a licensing fee, whatever the case is, any sort of licensing fees, regulations, restrictions on what you can do, what you can't do. Big companies that are sitting on a bunch of cash, they can absorb those fees. And then if they're long-term thinking, which we assume they are in economics class, they know that, hey, yeah, bring on the regulation. You're right. Well, let's save the environment. Yeah, I can spend a little bit more of these awesome profits that I'm getting. I'll carve out some of that to help a green issue. And as they start to erect the barriers on the kind of what's called greenwashing, whether that's genuine or not, we don't necessarily know. But if they're pro-regulation, they're helping to erect barriers of competition. And that's exactly what Angel's talking about here with the banking, that we can do a similar thing. And we got to be careful. Okay, good. Any other last comments there? All right, let's continue on. So before you came to the Federal Reserve, yours was a particularly diverse background. Professor of economics at Ottawa University. I'll just embellish a little bit there. Farmer, politician, banker, economic consultant, among others. All of this experience proved to be a nearly perfect background at the Fed. In fact, one of your earlier political opponents said of you, he's in his element at the Fed. He's got to be one of the world's happiest people. Have you been?
Well, I think that's kind of a compliment. Yes, I have been happy, but I was also happy when I was in the state legislature. And I was also happy doing many other things. I was happy when I was farming. The Fed has been an extraordinary opportunity, some sort of an unbelievable. I'm very thankful for the opportunity.
Well, it shows. It seemed as though it was a mission of yours, or at least a special interest, to focus on the FOMC meetings, or the FOMC on reacting to changes in commodity price levels. Did you make progress in your tenure toward that end?
Yes. In the 1960s and 1970s, I was a monetarist, a real fan of
into in 1983, you said that the Fed was to eat, and yet commodity prices were dropping. I said if commodity prices are dropping, how can it be that the Fed is too easy? Yet, M2 says that we are too easy. So M2 has to be wrong. When I first came here, one of the staff members said to me that they were given the assignment of writing a memo saying that a silly idea this was to pay attention to the commodity prices. But over the years, this institution has been willing to devote resources to a critical examination of these ideas. I've been fascinated with the willingness of the organization to put stars to work on something that at first not many looked through that help.
The first meeting that I talked about with Schumann and Volker in Volker's office, I recognized that Paul also watched commodity prices. I sent him a joke and called him a closet commodity price watcher. Remember that the price of oil fell to $9 a barrel. Only a year earlier was at $40, and many thought it was going to $100. That's really quite a difference to have the price of oil go to $9 when people thought it was going to $100. Monetary policy, of course, did that.
There were some who thought that Ronald Reagan was lucky, he never had any oil price problems. But Ronald Reagan wasn't lucky. He had Paul Volcker. The Federal Reserve controls the price of oil more than OPEC does. So we were in an easily demonstrated commodity price deflation, and monetary policy had to respond, and we did. There was then a kind of assessment of that, and in recent years, M2's honey growth has certainly overstated the monetary restraint. I think there are others who agree that we cannot run monetary policy on a Phillips curve or on a looking back over your shoulder basis. We must have some forward-looking indicator. I think the most skeptical person outside or the most skeptical person on the F14 is in an arena now in which the commodity prices are independent.
Okay, let me pause there for a second. So, M2, what was the statement? Again, this is something, you guys, that was pretty unique that Angel was bringing to the table that was different. So, what's M2 again? Money of what sort? Money measured how? M1, which is checking account deposits and currency in circulation. And then to make it M2, what do we add? Stuff like what? Savings account deposits, short-term deposit, small-time deposits, CDs, money market mutual funds, that sort of stuff. Okay, so it's all money that's fairly active in the system is M2. And he observed that M2 was behaving differently. And then we had this issue of commodity prices. And so he really brought something new to the table there. Any other questions or comments on that section? Okay, so speaking of commodities, Milton Friedman and Anna Schwartz, when you traveled to the former Soviet Union, you urged that they adopt a gold standard. Do you feel that same way?
Well, that was the proper way for me to approach the Soviet Union, as they had a serious problem. Those who had the naive view that deregulating prices prior to fixing the value of money did not realize that it would throw the Soviet Union into a depression and jeopardize democracy. I mean it. Really has been a criminal for us in the West to advocate commodity price liberalization. That is, freeing prices, and at the same time not fixing the value of money. In a sense, the dog is chasing its own tail to the death of the people and the death of economic growth and democracy. You must first fix the value of money, and then you can let prices go to their equilibrium level.
But to turn oil prices loose without first constraining the money stock simply meant that you were on an oil standard with constant devaluation. And as I said to them, the Soviet Union was enacted at that time in September 1989. If you will take aggressive steps in regard to the value of money, then you will find the transitional market system will work. If you do not, I said, you will then end up with a rate of inflation of 1,000%, and your country will divide itself into 1,000 pieces. I have no regrets with regard to the straightforward call.
I was looking to Russia's history. I could have easily said, tie the ruble to the dollar, but I thought that would be inappropriate advice for a great power, and so I said, tied to gold. They said, but gold and the dollar may fluctuate. I said, watch gold and the dollar. Their volatility will become less and less as we approach price level stability. Yes, I advocated for them. Not a gold coin standard, but a gold targeting standard. I'm very sorry that they weren't willing to listen and make that hard choice, but it was a very hard choice.
Okay, gotta pause there. Here our little guy from Kansas is now talking to Russia after they have gone from a communist regime and they're trying to open up into a market system. And here our little guy from Kansas is up there telling them how they should do their monetary policy and tie it to gold. Yet he was, I guess, judicial in the sense of saying, don't tie it to the dollar, because that would have been kind of a slap in the face of do it the American way, right? So, but he was very clearly telling them some good advice, I think, to fix their currency, which they didn't end up doing. But again, kind of speaking his mind and not afraid to fall to political pressures or other pressures of the time. Okay, so region. Hard choice. Region readers always enjoy a good pun. Within the institution, you headed the Bank Activities Committee. Some would say that you have become well known for chairing this internal administrative committee as for some of your more visible public policy activities. Do you agree with that, and does it surprise you?
Well, I don't know that is all that surprising. In March 1986, I had just been there a month. Paul Volcker called me in and asked me to chair the committee. I said I hadn't even attended the committee yet. He said, well, I know that I need you to chair it. From further conversations, Paul knew my legislative experience and that I had been on the Appropriations Committee and had been an Appropriations Subcommittee chairman for 5 years. He knew that I had a conservative bent regarding the public sector spending. One must be careful not to appear to be grand in our spending of money because the people won't understand. They will misjudge us. Paul and I shared a kind of conservatism that meant, to some extent, that there would be somewhat an increase in constructive tension. I hope not destructive tension between board of governors and the district banks.
Maybe Johnson said, Wayne, why do you want to do that job? I mean, there are enough troubles out there without doing it. But in regard for the Federal Reserve System, my concern for it has been to share that I wanted to ensure the future of ITBC as a very well-disciplined institution that maintains some real care about how money is spent. I hope I have been as conservative as my reputation.
So I got to pause there again. So he walks into Hulk here in his office, and immediately he's been there a month. This is all new to him, right? I mean, this is fairly new. He was a director of the Kansas City Fed, so he was familiar with the system. But to be in Washington, D.C., walk into his office, and this guy says, you need to chair this committee. And he hadn't even been to one meeting. So imagine that's a little bit awkward that he's going to go into the new meeting. Whoever was the chair is out. I don't know if it was a vacant position at the time or not. And so he's kind of put right into this somewhat power position of a subcommittee anyway. All right, one of the responsibilities of the Bank Activities Committee is to maintain the system's, make sure I flip to the right page, the system's physical infrastructure. In some cases, patch and repair was no longer the answer, and new buildings had to be built. Finally, with the new building project underway in Minneapolis and others within the system complete, would you now say that the overall infrastructure of the Federal Reserve is in pretty good shape?
Yes, I think it is. The building should have some quality in their design so people like it. When people sometimes make fun of marble places, I think about the Seattle branch. The sandstone used at the Seattle branch has gone through exploration to take place of it. It has always been difficult to maintain, and it is not always prosperous, since sometimes marble, such as in the F14 and Martin buildings which house the board of governors, is the lowest cost way to go in North Carolina. I have always wanted to take a long-term view.
I think we're
My only criticism about the present value cost minimization test we use is that under the pricing policy committee, we take all the fixed costs and throw them to one big pot. In recent years, the committee has moved to the position that any new building must be justified as if the fixed costs has to be owned by the price of services. I think
Considering your personal style and not your politics, the comparison has been made between you and Ross Perot. Ross Perot was a presidential candidate at the time that was a billionaire oil guy from Texas that was very pro-business. Between you and Ross Perot. That is, you are both usually quite certain about your positions, both project your ideas forcefully, and both have a populist message. Do you find the comparison apt, odious, or something else?
Well, I think I find it interesting more than odious or apt. I don't think it is that flattering because in some ways claiming always to be wise may make you end up being a fool. I think there always needs to be self-restraint in regard to playing such a role. Apparently I have not exercised enough self-restraint.
I have been willing to be a maverick, if you like. When most others are playing a mainstream role, I wanted to raise an issue and advocate it as if I thought it was right so that the debate can take place. But I'm very open to that debate process of exposing any foolishness that might get in the road. Manly Johnson chaired the Payment System Policy Advisory Committee, and I sat on that committee. And then when Manly left, I became the chairman. Some said, what a difference in your approach. Well, there was a different role to be played, and I believe that it is important for me always to be able to shift in terms of consensus, in terms of broadening the vision. I guess there's no question but that I have been willing in my public life to play a contrarian role, to be that messenger if no one else was willing to raise the question.
In response to those who would label you a maverick, you have said that due to a strict Baptist upbringing, such behavior only comes naturally. It's doubtful that a measure of contrariness has been the principal manifestation of a worldview so directly conditioned by religion. What has been the effect of your deep faith on you as a policymaker?
Well, I don't think that there is any necessary link up between the strict upbringing and being a maverick. Maybe some people would claim that if people are brought up with a very strict background, individuals are really afraid to think for themselves. Somewhere early in my life, I found it okay to think for myself. It's hard to pinpoint that, but I've always had some willingness to strike out on my own. Frankly, when I was an officer in the American Baptist churches, I think they thought I was as much of a maverick as anyone did. I don't know that it's a religious manifestation. In regards to my own faith, when I became a Christian, I started reading out of the Old Testament. I didn't really realize that Christians didn't read the Bible. I thought they did. So I read through the Old Testament before I read the New Testament. I suppose that the God of the Old Testament and the characters and heroes of the Old Testament saw themselves as having to speak up. This was steeped into me early in my life.
So much has happened during your term. Can you point to any decisions or outcome that was most gratifying, one of the true high points?
Well, there really have been so many. It really is so difficult to pinpoint any one. My friendship with Volker was a very important personal one. I'm always grateful that that worked out in the way that it did. It could have been quite different. Alan Greenspan has provided me with additional opportunities to sharpen my monetary policy thought process and my tennis game. It has been a growing relationship and a good friendship.
There's been a great deal of satisfaction that I've had in the payment system area because in terms of focusing tactical expertise, this has probably been the primary focus. Monetary policy has been a primary reason for me. Making it through these committees has taken up a great deal of my time. But in regard to innovative and constructive thinking and leadership, the moves we have made in Cousins or in the G10 in regard to the payment system have been personally very, very gratifying. It's a technical kind of work that if we do it right, no one will ever know we did it. Yet it is so necessary. Many mistakenly concentrate on certain kinds of risk, like the holding risk, which isn't the problem at all, because the financial world will innovate one way or another. They'll do it offshore or onshore.
What needs to take place is to move the payment system ahead of the 21st century. I'm very pleased with what we've done with regard to our netting funds. I'm very pleased with where we are with regard to the daylight overdraft reporting system. I think the progress that will be the crowning achievement for me in this area would be the achievement of a daylight value of money, which will enable the Fed wire to be in operation maybe 20 hours and enable the dollar to function as delivery-based payment currency in all regions of the world.
All right, I think we're going to close out there. We just got about a minute left. So any last comments, questions about what he said there? Has this helped to get a little bit of an inside track on what goes on with the Federal Reserve for this chapter? Got some idea of what these guys do. That's kind of the main thing for chapter 16. All right, we'll call it a day there.